everybody else that runs in late, they can run in late. It's 7 o'clock. So we're not going to be on CP time today. All right. So a little bit about myself. Hey, what's up, bro? I see you over there. So a little bit about myself. My name is Sabor Demary. I'm an acquisition manager, and we also are a credit investment firm. Also, I've been a managing partner of a mortgage and servicing company. Within the walls of this company, we also purchase and broker performing and non-performing loans from banks and other financial institutions. We typically assist in the acquisition or closing of mortgage notes, approximately about 2.5 million a month. On top of that, we currently own 29 properties, some with and without partners. And also, we have new online business ventures. Me and my wife. One is called In Marketplace, and the other one is called LLJ Lux. So we have online stores too. Every Friday, we try to host these calls. I like to call boss up because we teach people basically the simple things of how to level up their finances and take their finances to the next level with simple steps of personal credit repair, paying off debt at accelerated rates with the hopes of changing mindsets from consumers to investors. Then we learn how to create generational wealth so we can pass this information down to their kids. Now, somebody might say, well, why is he doing, he makes all this money. Why is he teaching people these lessons? I learned a while ago in my 17 years, there's a correlation. I dealt with a lot of people that happen to be the other color that's buying loans from these banks, but the ones that were always stuck with the back end or living paycheck to paycheck was the minorities. They didn't know, like a lot of us don't know anything about finances. So me being in the finance and mortgage industry for so long, I wanted to share all the information and knowledge that I use to get past the rat race and living paycheck to paycheck so that I can actually educate somebody else because I know everybody needs it. We just did a study. There's 53 million Americans that have poor credit, no credit, or low credit. So that lets you know that they're not educated on the finances and how to level up their finances. So that's why we have this class every Friday. It's an accountability class. We make sure that everybody is held accountable. So I don't just talk it, I live it. You know, I'm out at the rehabs every Friday, Saturday, and Sunday. I run back here to finish my get on these calls. I'm be super tired and beat. I work about 24 hours a day. I don't sleep, but I still have time to educate, and I always my phone is always available. All right. So one thing that we teach in this class is ways to leverage. A lot of people don't know what the power of leverage can create in your life. You can actually keep the same pay scale that you currently have and learn how to leverage that pay in order for you to create a generational wealth for your family. So the way that we do this, so the way that we create generational wealth for your family is going to be three things that you have to know. You're going to have to know what your income is monthly. Okay. You minus your income from your expenses. Okay. So when you take your income minus your expenses, you get what is called your cash flow. This is what the number that you really need. We need to know your cash flow in order to complete or create generational wealth. We need to know your cash flow. Okay. Again, income. A lot of people don't know how much they really bring in. Expenses. That's subscriptions, all the little tiny things, all the little tiny things that you don't even think about. It comes out of your checking account. You need to know what they are. Minus that, you're going to get your cash flow. That is your money left over every month. Okay. Now, how does cash flow work as far as creating leverage? Okay. Now, anything that you know, anybody that knows anything about the power of leverage, leverage gives you the opportunity to create your increase, I should say, your financial options. You'll get lower interest rates. It allows you to pay less for purchases. You beat out competitions for your business. Business will try to give you credit. Where most people are trying to apply for credit, business will actually be trying to compete for your business. It'll allow you to invest in profitable opportunities. You'll be able to establish a solid credit rating, credit score, or credit profile, and get, of course, get approved faster for loans and higher lines of credit. Now, most people that I know of normally, and even in their adults, probably have on the personal side roughly around a credit card no more than 5,000, and they're adults. Everybody on our team, they have to have a level, they have to have credit of 120 plus. We need available credit of 120 plus to play this game. So that starts out with building your credit profiles. That starts out after you build your credit profile. The next thing that you need to do is leverage that credit profile. That gives you a monthly cash flow for you to work with. Now, it may sound crazy. You stop me anytime if something don't make sense. So just please let me know, and I'll be basically help you. Now, my goal is to teach you how to beautify your credit, update your profiles, leverage that credit in order for you to buy performing assets. If any kids are on the call, I apologize. I do not give you these tools so you can go buy more shit. I want you to buy assets. We need you to buy performing assets, something that creates passive income. We want to teach our children generational wealth. We are behind. If you can think back 3 generations, if you think back 3 generations from where you are at now, it is the same. Our moms, our grandparents, and their grandparents, even though the cost of living has gone up, we are still at the same pay scale rate. We are still have the same takeaway, and we need to change that. That's where my passion comes in. My passion comes in teaching people how to change that, okay? All right, so I'm going to show a quick example of the power of creating leverage in your household. So can y'all see my screen fine?
No.
All right, so this is an example right here. We have a cash flow, a monthly cash flow. The people have $43,000 coming in, okay? They have a mortgage of 15. They have a credit card with a balance of 1,500. And then they also have the limit on that credit card, meaning how much they're allowed to spend is up to 3,000, okay? So they owe 15, but they're allowed to spend 3,000. Their mortgage is 1,500 a month, and they have other related consumer debts, which gives them a monthly payment of $265. And they have their personal expenses, and this is all broken down in here. So we have personal expenses, which is going to be your electricity bills, water bills, and all that type of stuff like that. Okay. So on their debt side, I just put it all in one place. They have a Capital One auto finance with $265, and they have a Capital One again.
I'm sorry to interrupt, but we can't see your screen. I don't know.
Oh, okay, sorry.
We can't see anything, honey.
Can you see it now?
I can see your screen, actually.
Okay.
Yeah, I can see it. It's fine. It's been up there the whole time.
I can see it now.
Okay. Maybe it's the font.
Yeah, I still can't see it. It just says you started screen sharing.
Okay. Let me
I don't see it either.
All right, give me 1 second. Let me try to reshare. Is that better? Can you see it now?
I can't.
I can't either.
No, I still can't see
No,
it.
I'm gonna stop.
Oh, Jesus.
All right, let's see if we can share this again.
There you go. I got
Got it.
Got it?
See it.
Okay,
Yeah.
well, let me start back over here.
Thank you.
No problem. In this situation here, we have a person that has $4,300 coming in a month, okay? We have a mortgage of 15. We have other credit card debts of another 15, but they only have a monthly payment of 65. They have other related debts, but they only make 265 on that one. That's going to be car payment and stuff like that, okay? And they have their personal expenses, which gives them a gross. This is how much that they owe every month, they pay out. And this is how much money, the net cash flow is how much they have left over every month. Now, with your net cash flow, this is your tool that you need in order to create your financial future. This number right here, you need to know what your cash flow is again, okay? Now, with knowing your cash flow, what that does is give you the power to leverage that in order to create a financial future for you. So we teach you how to go to your credit cards, update your credit card profile so you can get high limit cards. Now, this person in this situation here has a credit card that only allows them to spend 3,000, but they owe 15. There are 5 things that make up your credit score: your payment history, your utilization, meaning how much of that available credit that you're using, your age of credit, and also the types of credit, and also inquiries, meaning how many times you apply for credit. Now, in this situation here, they only have one credit card. They have it's worth 3,000. They're using 1,500. They're over 50% of their utilization. By credit bureau law, well, not law, but by credit bureau standards, if you're over 30% of your utilization, you're credit thirsty. You're relying on your credit card in order for you to live. So your credit score goes down if you go over 30% of your utilization. Make sense?
Yes.
All right.
Definitely.
So, all right. So first thing that we want to do in creating this person's profile is we want to make sure we look financially sexy. I like to tell everybody we want to look financially sexy when we apply for anything or try to get into business or create a passive income. Okay. So what I would do in this situation is first thing I would do, I would attack this credit card because we know they have a cash flow of 2,000, right? So I would pay off the 1,500. That will leave 5 for that following for the next 2 weeks. But by paying off this 1,500, the next thing that I would do is I would move all my personal related expenses, all these, over to that credit card to come out. No more anything that can come out of my checking account that can be paid off a credit card no longer is paid out of my checking account. All you have to do is set up for automatic pay and it'll come out on that checking account. Okay. Make sense? So most people in this situation are going to either have just their mortgage and their car payment left coming out of their checking account. Everything else is coming off out of their card. Now, what we like to do is what we call paycheck parking. So every week or every bi-week that you get paid, you'll take the money minus the ones that's coming out of your account and throw it right back to that credit card. Okay. Now, because you just paid off that 1,500, your credit card payment is automatically satisfied. These bills are probably sporadic throughout the month. So most of them are going to be on the first is the 15 where you have most of your cash reserve at, okay? So on the 15th of that following month, what you'll do is go to your credit card company and ask for what is a credit line increase. Most companies, loans that you satisfy them, that balance and you're under 30% will give you a credit line increase. So in this situation, let's just say that this person went in their credit card and they gave them a credit line increase. So now this increase went from 3,000 to 6,000. Just going to double it up. And if I can edit on it. So it went to 6,000. So now what we have is on our cash flow summary. Now my thing is freezing. So now what we have on our cash flow summary, and this debt is gone now. This debt, the 1,500 is gone. So now we had 265, which was their monthly expenses are being paid out of there. So what we like to do now is now that we're paycheck parking, we need to attack your next bill. We need to attack the next thing that they have outstanding that was not that's in their way from creating their financial future. Okay. So we have a Capital One Auto Finance car. And Brandon's on the call. I think I heard him speak. Brandon used this technique and he paid off his car in 2 months. We have people that use this technique and paid off all their credit card debts and more in 3 to 4 months. I think they're here tonight. They're on a vacation. They got some money and they went on a vacation. So anyway, so we have a car that has a balance of 4,000. Okay. So we have a car that's $4,000 that's left over. Then we have an amortization schedule. We'll just keep it at, say they're paying 6%, and most cars are five years, okay? So what I'm gonna do is we're gonna use this car, and most people are just gonna make the minimum payment. What I'm teaching you is creating cash flow for your household. So you're eliminating all that. So we have a car for 4,000, it's a 5-year, and the first thing that we're gonna do is take the 2,000 off of the credit card. If you liquidate your card, we teach you how to liquidate your card. You take the 2,000 off the credit card and drop it onto the car. You just save yourself right here, $3,000. I'm sorry, it's $100 in that one in interest. All right, so we know with their monthly cash flow that they only take them 1 month to pay back. That's their cash flow. That's how much they have left over every month. They're using the cash flow. We know that it takes them 1 month. So then again, the following month, we use the same 2,000. They just paid off their car in 2 months. Now, remember they had a credit card payment of 65 and then also that car payment of 265. They just increased their monthly cash flow into their household by almost 300 something dollars. Okay. So the only thing they actually have left, all their bills and debt is gone. So this is gone. This is gone. And now we have a credit card with available credit. The only thing that's coming out monthly is our monthly expenses on our credit card. And we're attacking that with our cash flow. You just increase your family income by creating leverage, using the leverage, the power, the tools of using the credit card. And again, this can be done with a credit card, a HELOC, a personal line of credit, or a PLOC, which is a personal line of credit or a business line of credit. We do not do loans. The loans are the devil. Anything that's amortized in your life, mortgage, cars, student loan payments, everybody knows that it would get you stuck. You know, I had a guy last night that would actually call me at 1 o'clock in the morning crying. He's trying to build business credit. They tell him that his credit is not lengthy enough for them to award him credit. But this guy just graduated from Temple University. They'll give him 30, 40,000 to get in debt, but they won't give him 100K to create a future for himself. So this is why this is important to me, to teach the people to leverage. So most people, when we got paid, we were taught, you get paid, money goes in the checking account, and then you pay your bills out of your checking account and you live off the rest. What I'm telling you guys is that you bills, checking account, line of credit, then bills. Yes, Chantel. Somebody had their hand.
Can you speak a little bit about the difference between loans and lines of credit?
Sure. So on a loan, when you look at a loan is basically an amortized loan. So banks get paid off first. They're always going to get paid first. So, and one of most times, the biggest amortized thing that we're going to buy in our lives or get in our life is going to be a mortgage, right? So I'm going to move this over here. Just for example, somebody give me a number on a mortgage, the average 200, fine?
Sure.
Okay, so we have a $200,000 mortgage. Right now, interest rate's at 3%. So we're going to use it. Most people are going to take the lower payment. So we're going to do a 3.5. This is going to be a monthly payment, right? That sounds good because that's not high. Most people rent is higher than that. So most people jump on that, right? So, but what you're going to learn is down here in your amortization calendar, you're going to pay the principal, and this is how much you pay in interest. But if you look at an amortization calculator, most of the payments for the first 22 payments are going to, 222 payments, I apologize, are going to be all interest. This is how much goes towards the principal.
Tabor,
Mm-hmm.
you just do that again for us? Go
Yes,
a little
ma'am.
slower with the screen so
Yes.
folks can actually see it for a minute.
Sure.
Just pause a second after you say it.
Yes, sir.
Thank you.
So in this situation, you have a principal payment of $200K. After the 30 years, you're going to end up paying $123 in interest to the banks. So your total payment that you'll make back to the bank off of that money is going to be $323,000 that you'll end up $23,000 that you'll pay back to the bank in interest alone. Now we have a young man that was on the phone call last week. He bought a $500,000 property, but on the $500,000 property, he used his HELOC and he dropped $100K down off the top on his first monthly payment. That killed the interest. Now, going back to my situation here, we're going to use somebody that has a credit limit of 120K. That means that allows them to play with $36,000 a year before their credit score goes down. Remember, we have to stay under 30% of the utilization, okay? So we're going to do the same thing. So this is how much they would have paid in interest. Let's keep this number in mind here, okay? Now I'm going to show you the power of what I'm teaching in velocity banking. So we're going to take the same 200K, and then we're going to use the same interest rate, and we're just going to change my terms to 360. All right. So now what we're going to, so this is our monthly payment again. It's the same monthly payment that we see on the amortization schedule on the other side, okay? And I have an extra payment in here. Take that out. All right, so this is your scheduled payment. And why is it not giving me a principal payment? What am I doing wrong here? Oh, I put 3.5. Here we go. Sorry. Why is it doing that? 3.5. Okay.
Says loan period.
Here we go. Nope, that's not right.
Oh, I think you have to put 30 years, no?
I got the 30 years. Oh, maybe I have to put 30 years here. Maybe that's what it is. No, yeah, there we go. Sorry, apologize. I was using it by months. You got to put the years. All right, so now we have 200K here, and then we have 3.5 on the 30 year. Now, say that somebody has 120K in available credit, because most people we teach how to get 120K in personal credit. That means you have $36,000 a year. But we're going to be conservative, and we're only going to take off 20K off your card. Remember, we're using the same cash flow of, well, now his cash flow increased because he eliminated both the car payment and plus his credit cards, okay? So we had 2,000. Give me 1 second here. Get my little handy dandy calculator out here. And it's, I know I'm sounding complicated because I'm trying to speed through it, but if anybody has a question, please slow me down. All right, so we have $2,000 plus the $265 that he was paying for the car. It increased his monthly cash flow, plus the $65 that he was making on the credit card payments. So this increases cash flow to $2,330. So what we're going to do is we're going to take $20,000 off of the credit card. So they have $120,000 available credit. We're going to drop $20,000 on the mortgage. What that does is automatically this saves them $32,000 in interest. So $33,000 in interest is saved just by dropping that $20,000 back. All right. So now we know that we have to pull back over my calculator here. So now we know that we have 20,000, but we're using our cash flow, our monthly cash flow, to pay back the 20K. Okay. We're only using our cash flow. We're not, all of our expenses are still the same. We're just using our monthly cash flow. That credit card is your lifeline. That is now your new checking account. Everything comes out of that credit card. You go on vacation, whatever, that's your new credit card. Okay. So what we're going to do is, go ahead.
Oh, sorry, didn't mean to interrupt you. I have a question. So, when you have the line of credit, for you to first initially get the line of credit, are there, conditions you have like a regular W-2, or is it okay if you're like a contractor?
You're breaking up really bad. I can't hear you. You're breaking up really bad. I can't hear your question.
Sorry, can you hear what I'm saying now? I wanted to know if it's do you have to have do you have to have a regular W-2 type of income verification, or is it okay if you're a contractor? Does it matter?
No, it doesn't matter. You're using your current income and you're using your current credit card. In this situation here, we're saying we're using a credit card in this situation here, okay? Give me 1 second here.
She's selling.
So in this situation, what we're using is a credit card, your personal credit card that you currently have now on hand. You're not applying for anything new. If you have a personal line of credit, a home equity line of credit, anything that's revolving. The reason that we stay away from amortized loans, you want something that you can pay, use again. So if I make a credit card payment today of $200, after that credit card payment post, I can reuse that money automatically. So you want something that you can pay,
I
use
got-
again.
Okay, got
Okay.
it. Thank
Yes,
Yep,
ma'am.
that-
Okay. So that's why we use lines of credit, anything that's revolving. That's why most business owners do not go for business loans when they offer loans or home equity loans. We want lines. We always want lines. That's what we're teaching everybody on this call. You want lines of credit. Stay away from loans. If your bank try to offer you a loan, just walk away from it. That's not what I want. You want something you can pay and use again because you're creating a lifestyle. You're monetizing that line of credit to create passive income. Okay. Now, again, we're going back to this situation. This person that has a $200,000 home with a 3.5 interest rate on 30 years. Now we have available credit of 120,000. We're going to, and that means he can use we can use $36,000 a year before it tanks your credit score. Anything over 30% that most people know would tank your credit score. But with 120K, that's most people's salary. $36,000 is most people's salary. Okay.
I have one question. I'm sorry, I didn't interrupt you, but yeah, I'm a little confused because if the person you're talking about only has a $3,000 credit line, right, or a credit card, how is she getting a $125,000 credit card? You know, because it doesn't make sense. Because if her credit score is, and she can't qualify for 125,000. How could this be true? You know what I'm saying? I'm not being obstinate. I just want to know how she getting a $125,000 credit card.
Well, what we teach is after you go ahead and get to max out your card, we teach people how to apply for other cards and get high limit credit cards. So you're not getting a card at a $6 or $5 or $1,500. You're getting credit cards starting at 10 to 25K. So you get 4 or 5 of those cards, then you'll have the available credit.
Okay, yeah, but what I'm saying is they have to qualify for those $25,000 credit cards. You know, you need each one to be 25. How do they qualify if they can only qualify for a $3,000 credit card?
So you got to remember, now we're optimizing their credit report. So we don't just go in and just show them how to pay off the debt. We actually optimize their credit profile so they look what we call financially sexy to the banks when they apply for their new cards, if that's the method they're going to do. Again, we have some people that use their home equity line of credit, or they can do a personal line of credit from the bank, or they have a business line of credit.
And Sabor, you're actually helping. So, I mean, the beginning process of this is helping folks to get their credit. If they have bad credit, it's helping them to restore their credit and repair it and get them to the point where they can get those sort of cards.
Yes, we help
So
we help them optimize their credit report so they can get those high limit lines of credit. Yes.
Right, and we're starting where they are, right? So some people may need that, some may not need that. And if they don't need that, then you're just optimizing what you have. And then once you optimize that, they can also apply for others, or it could be simultaneously.
But sir, I did change it from the 3,000. I did say that we got them 120K in available credit before I went over to the scenario.
Oh, okay. So what you're saying is you guys help these people get $25,000, $10,000 credit cards. It's based on building their credit or their profile.
Yes, our goal is to teach people basically how to leverage credit. We try to teach them the power of leverage. So once we teach them the power of leverage, is their responsibility and job. But we have accountability calls, coaching calls, every pay period that shows them how to pay off these debts and also how to generate generational income, passive income.
Okay.
So in this scenario, I apologize. So we have somebody that has the $2,300 left over every month. We took $20,000 off one of their cards and dropped it onto their mortgage. Okay. So in this situation, it'll take us 8 months, almost 9 months to pay back using their cash flow, their leftover money every month on that card. Again, that card becomes your life. That card becomes your new checking account. You get rid of the debit card. You get rid of any withdrawing money out of your account. Everything is done with your credit card. It is your credit card. I know people have a history. We have this mental block that people told us not to use credit, stay away from credit. Everything is done in that card. Okay. because that card is what you're using to leverage and create a life for your family. Now, it takes us, with this income right here of 2,300, it takes us 8.5 months to pay back that 20K that we took off the credit card. So what we're going to do is count down together, and we're going to count 9 months. So it's going to have 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay. Now we're at that 9 months. So what we're going to do again, we're going to take another 20K off of that card and drop it down. Every 9 months, we're dropping off 20K. So what we did now, we just saved you $56,000 in interest. And your monthly balance went all the way down to 156. Now we continuously do this for the next 3 years. You'll have this total $200,000 mortgage paid off.
I have another question. So for this credit card, I mean, if it's, would this, could you just do this information? It'll be just like if it's your personal, will it be going against your personal profile, or is it that you build up a business profile, or does it matter?
So it depends on you. Some people on this call are not business owners. If you're using the personal side, I don't know what you meaning against you, but what it does is shows the bank that you know actually how to use your money. If you're making minimum payments every month to the banks, you're not credit worthy. But if you're making pay offs, what we're teaching is pay off, not payments, then you're going to be awarded. They're going to be fighting for your business. Now, if it's on the business side, yes, you need this strategy in order for you to level up and create a business profile. Most business owners, I would say 60% of the business owners that we surveyed don't even know they had a business credit score or even how to pull their business credit report. So yes, you do need this strategy if you're on the business side. Now, how I use this on the business side is the same thing. I know my business monthly cash flow that comes in. Okay. Go ahead. I'm listening.
Nope, I didn't say anything. You could.
Okay. So this is how I used it to create passive income for my family. And I know, Tim, welcome, sir. I'll give you the platform in just a second, okay?
Yeah, I'm here.
All right, thank you. So how I did it, and Tim will tell you how he did it too, because Tim actually is one of a good friend and mentor to me. So say I go find a property here in Tennessee, and it's for $50,000, okay? What I'll do is to say I'm give bank give me, because I have investor loan. I'll take the 30 years at a 6%. That's going to give me a monthly payment to the bank of $300. Okay, what we do is what we call seller finance to the end user. We seller finance our property to an end user. So our mindset is every dollar out, $2 in. Okay, so we bought it for 50, we fixed it up, and now we're selling this for $100,000. Okay, now their loan to me is going to be $100,000 at a 10% interest rate. And again, we give them 10% because they cannot get traditional lending. They have credit issues or something wrong with them. So their monthly payment to me is going to be $877. We also include taxes and insurance, because you do never want your borrowers to pay their own taxes and insurance, because taxes is a super lien. They'll put a lien on your property. But this is their payment to me. So say round it off to 1,000. Mine is to the bank 300, and our cash flow be 700 left over. Okay. Now, how do I get rid of this property so that I'm generating all cash flow and I don't owe the bank anything? Okay. So most banks are going to require from an investor to put 25% down on investment mortgage. So in that case, this is going to be, we're going to say, I always pull my calculator because we always got that Judas. So we have 20 times 25% down. So that lets you know how much I had to put out of pocket. I leveraged my credit card for my down payment. I didn't take no money out of my pocket. I took it off of my credit card. Okay. Now this is my starting balance to the bank. Now I can tack this two ways. I can tack my credit card payment back first by using my cash flow. My cash flow is 500 at this time. I mean 5,000 at this time. So sorry. Now we can do this two ways. If I hope I'm making sense here. So I have 37.5 that I owe back to the bank. I'm at a 6% interest rate for 6 years. And I can, first thing I'm going to do is leverage my credit card. I'm gonna use a 20, okay? So I'm gonna use 20,000 and I'm gonna drop it here. This is how much, that's how much I end up saving in interest, the 38. I have $5,000 cash flow. Now I can either attack back the 12.5 first, or I could go ahead and finish paying off my mortgage. So which way do y'all want to do it? Pay off the mortgage or pay off the credit card?
Mortgage.
Okay, so we're gonna attack the mortgage. So 20,000 divided by 5 is gonna take me 4 months. So every 4 months, 1, 2, 3, 4, and on my 5th month, I'm dropping another $20,000, and I paid off that credit. Well, I'm not really dropping 20,000 because I already paid the mortgage off. I'm only going to pay off the remaining balance of 1676, 78, 18, and I paid off that mortgage within 6 months. Now Tim is on the call. I'm gonna let him speak because he is an expert of seller financing, and he's taught me a lot of these strategies and how he personally built up his own portfolio of real estate, over 100 properties and plus over 1,000 acres of land. So Tim, I consider a good friend. We met probably about 5 years ago. He was liquidating all of his properties.
Can people mute if they're not talking? There's some feedback. Can people all mute whoever's not talking?
Tim, you there, sir? I can't see everybody here. Give me 1 second here. Oh, here you go. Tim. Unmute. There you go.
Am I good?
Yes, sir. All right, so Tim, everybody, this is Tim Crane. He's a good friend I met 5 years ago. I met him. He was looking to sell, get out of the real estate and get into land only. So again, I asked him to be our special guest here to go over his journey and how he created his own personal profile and portfolio of real estate notes and land contracts to create passive income for his family. There you go, Tim.
Hey, thank you, Sabor. I actually heard you talking about the amortization and trying not to get into loans as a consumer, and that is exactly it. Amortization sucks if you're on the paying end of it, but if you're on the receiving end of it, it's absolutely great. So what I try to do is I try to create opportunities with properties. I buy properties that I can then make an income producing asset, like a single family home or land. When I first started, I used to buy homes. Homes back then were a little bit cheaper. I could find a house for like 20,000. I could buy the house for 20,000. And I used leverage, like you were talking about before. I would go to the bank and the bank would want 20% down. And so I would put $4,000 down to buy a $20,000 house. I'd borrow 16,000. My payment to the bank would be like $300 something a month for 5 years. I would turn around and sell that house for 40 grand, 45,000. Most of the time I wouldn't touch them. I wouldn't fix them. I would just leave them like they were. And I would be able to sell them with owner financing by asking like 2,500 down or 3,000 down. I would make them affordable. I charge 10% interest. Like you said, for every dollar out, I get $2 coming back in. And so most of the time when I would sell those properties, I would sell them, I would offer owner financing up to 30 years. And most of the time the people would take the 30-year note. And so as I would try to make sure that their 30-year note was higher than my 5-year payment. So sometimes I wouldn't have much cash flow at first, but then in 5 years, the property's paid off and you got 25 more years of payments coming in. And so when I first met Sabor, I probably had about 40 houses. We had started buying some land, and for tax purposes, we decided to strictly just buy land and to stop buying houses. And so they wanted us to liquidate some of our houses. And so that's where Sabor came in. I met him, and he helped me get rid of he helped me sell some of the notes that I had. And so now we basically focus on big plots of land, and the 2-to-1 strategy that I first used when I was buying houses, I've now perfected it a little bit more to where sometimes I can get 2.5 to 1, sometimes 3 to 1, sometimes even 4 to 1 for every dollar I spend. So I'll give you an example. Me and my son, we purchased a plot of land. It was 86 acres of land. It had been clear cut. We paid $650 an acre for it. We bought it for $53,000. I chopped it up into 6 tracts of land, and I sold those tracts of land for a total of $205,000. So my payment to the bank on the $53,000, I had to put about $10,000 down. My payment to the bank is, I think it's $386 a month from that tract of land. And those 6 tracts that I turned it into, I bring in about $1,800 a month. And so I took a piece of property that wasn't an income producing property, and I turned it into an income producing property where people now make payments to me, and I'm able to draw interest on it. The basic formula is, if I put $10,000, if I buy $10,000 worth of land and I'm able to sell it for $30,000 at 10 and then draw 10% interest on it, to me, that's the best investment that I've ever been able to find that I can actually do myself. I know that there are other ways to make money, but this is the best strategy that I found. And so I just keep applying it over and over and over and over again. When I first started, me and my brother started in 2007. I put in $15,000 and my brother put in $15,000, and we used it as a down payment. We bought 100 acres of land. We chopped it up. We owner financed it out. We started buying houses. Now we've never put any of our own money back into the property again, into the company. Now we have 2 companies. One of them's worth over $2 million and one of them's worth about $1.5 million. And so we have about $35,000 a month in passive income that comes in from our payments. And here in about 4 years, we will be completely debt free with over $35,000 a month coming in payments. And so I like sharing what I do with people. I like helping people if they want to try and do it themselves. It's not something that I don't think anybody can't do. It just takes a little bit of hustle. It takes being able to find a good deal. And then being able to work the deal and make it a productive asset to your portfolio.
So what do you say to people when they say there is no properties out there about $20,000, $40,000, $50,000? Because I know when you first taught me, you was like, the board, stay under the $50,000 property. You're going to make more money. What do you say to those people that say there's no such thing as properties out there like that?
Well, some markets there's not. In some markets there's really not properties like that. But where I happen to live, I'm from South Florida originally. I moved to Tennessee in 2006. When I moved here, I felt like everything was on sale because everything was so cheap here, and it has stayed relatively low in this area. Even though it's raised a little bit, it's still relatively low with low taxes in this area compared to other parts of the world. And to give you an example, I had somebody call me from one of my ads about 3 weeks ago, and she said, "Hey, I saw your ad. You buy houses. You used to live next door to us. Come over here and look at our house and maybe buy it from us." So she told me she wanted 75. I negotiated her down to 60. I closed on it on Monday. I bought the house on Monday. I spent $700 having somebody come in and finish the floor, and I've got it on the market right now for $129,900. I've got 3 offers on it already, and I'm looking, and I just closed on it Monday. I just put it on the market yesterday, and I told everybody that went to look at it, hey, I'm going to just look at all the offers on Sunday evening That way I give everybody a fair chance to go look at it and I'll be able to pick the best offer. But I got that property for 60 grand. It's a 3-bedroom, 2-bath house on 6 acres of land. So, I mean, they're still out there. They're still there. You just got to work. You got to find them. You got to advertise. You got to be able to. The biggest thing for that seller right there was the fact that I had cash and I was able to close quickly because they were ready to move on. They had their daughter was having surgery and their son would needed braces. And so they just wanted the money to be done. And I was able to offer because I have a line of credit on my home. So I was able to take some of the cash out to just buy it quickly and then turn around and sell it and hopefully make me a pretty good lick on it. So
now creating that. Go ahead. Somebody want to ask questions? I'm sorry.
What makes a person want to do owner financing as opposed to like we went to look for our house. We just automatically there was it was Century 21 or someone. We got with a mortgage broker. They offered us a mortgage. What makes someone more attracted to owner financing as opposed to the other route?
Okay, so if somebody could go to a mortgage broker or go to the bank and get the money, then that would be the best option for them. But most of the time, the little houses that I buy, they're fixer-upper houses. They need work or whatever. And so I buy them for 20, my payment's cheap, and I can turn around and sell it for 45 or 50,000, and I can still keep their payment rather cheap, 400, 450 a month. And I offer $2,500 down, no credit checks. You can pay me the money today. You can move in today. You see what I'm saying? And so I make the process very easy. And most of the people that I deal with aren't actually able to get a mortgage. So they might have money from a tax return or they've been saving for a little while. They may have $4,000 or $5,000, but they don't have the credit to borrow $40,000 or $50,000. And so they can't get the loan. So they're either stuck being a renter their whole life, or they have to work very hard to try to become a homeowner, which I recommend people do that if they can. But sometimes you get caught up in life and it's hard. And here I come along and I'm offering them the option of being a homeowner, not being a renter anymore. And so most of the time when I put my homes up for sale with owner financing, I have 15 people fighting to get it.
So
and
yeah,
I get upset with me because I didn't choose them to buy it. I chose somebody else. And it's just kind of the draw, you know what I mean? I don't mean to hurt anybody's feelings, but so you win some, you lose some, you know, and some people get mad because that was their only option. And so what I started doing was I started an email list. Like I started all of those people that got mad at me. I would say, hey, give me your email. Next one I get, I'll email you. So now I've got 2,500 people on an email list that every time I get one, I email them. They're standing there waiting for it. You know, they want an owner finance house because they can't get it any other way. So if you use owner financing to sell something, it just makes it that much more attractive to the people who, and I hate to say it, but maybe just don't have everything in order, you know, don't have everything correctly in order like they should. There are other places that use this same tactic all the time. Buy here, pay here, car lots, rent a center. They do that with refrigerators and couches and beds and everything. So is everybody still there?
Yes.
We're listening to you.
Yes, we still have.
So I have a question.
Go ahead.
Okay.
What is your risk as a like the buy here, pay here? What is your risk in that?
Okay, so usually, again, if I buy, when I first was buying houses, I used to buy houses that were $15,000 or $20,000, pretty cheap. But I would try to make sure that they were still halfway, like you could fix them up, or you could live there and work on them and fix them up. And so most of the time when I sold the house to somebody, it was already in a disrepair type of condition. So that the person who bought it has the intention of, hey, I'm going to buy it. And what do they have to do? They have to start fixing it up almost immediately. So they move in, they're not a renter, they're moving in with the mindset that, hey, I'm buying it, I'm gonna fix it up, it's gonna be my house, I'm gonna make it the way I want it. So they get in there and they start fixing it, fixing the windows, painting, and they get tied to it. They get invested in it. You know what I mean? And so that in itself brings a better tenant, a better person who's going to make payments. Now, I people always ask me, hey, you get people who stop paying? Well, of course you do. And the percentage that I've ran into is it's about 80% of the people I sell to are good people. 20% of the people, I got to chase them around to try to get my money. But that comes with part of the business. You know, if you're going to have 100 properties where people make payments to you, you're going to have to chase a few people around. So, you know, we implement policies and rules, and I have contracts that I make people sign so that, you know, I try to get everything in my favor so that when it does come time to, hey, you're 3 or 4 months behind, you know, it's time for me to kick you out or whatever I've got to do. I can go to bed at night knowing that you didn't just miss your first payment and I took it away from you. I actually tried to work with you and make it where you could own this home if you want to. But if for some reason you choose not to pay, well, then I have to do something about it. You know, I have to have you evicted or whatever I've got to do. And by the way, I've been to court a couple of times, probably 4 or 5 times. Every time I've been to court, I've gotten a judgment against the person for whatever amount of money they owed me. I've never gotten to collect any of it, but it's a tax write-off anyway. But any other questions?
Oh, hold on, Tim. Let me tap in on that. So you
Sure.
asked, what's your risk of being a mortgage note holder? There is no risk. It's all upside. As he said, if they move in and they put a fence around, that's appreciation. If you take back that property, then you're able to sell that property at the new appraised value. If they stop making payments and you want to just sell the mortgage note and go after them, there's a secondary market of people that buy non-performing loans. Right. So there's no risk into creating what we do as seller finance notes. It's all upside. Now, the only thing, like, I'm pretty sure Tim would tell you, he probably took back a property 4 or 5 times, but every time you take it back 4 or 5 times, you get to sell that property again at its new appraised value. So you're never at loss.
Right. You usually not. Now, there is a risk. Like you could have a decent little house and somebody could move in and mess it up or whatever. But most of the time, the houses I bought were already in disrepair. So you see what I'm saying? So if they did move in and they didn't fix it up, it didn't really deteriorate any. It was already that way to begin with. So if they get in it and they fix it up, then that's to my advantage. Now I just buy land mostly, unless I can, you know, somebody comes along and drops a good deal in my lap like that house. I try to stick to land where I don't have that problem. If I buy land that's had all the trees cut off of it, there's really not much they can do to it other than dumping garbage on it or something. I don't have to worry about leaky pipes or leaky roofs or electrical problems or nothing. It's just land, and you do a land contract, and that's what it is. If they build, then that's something that they built on your land that hopefully they just pay it off, and that's what they do. But if for some reason they quit paying, then that's to your advantage.
Tim, I got a question for you on the land. So you buy 100 acres of land, right?
Right.
And you go get it surveyed. How much does it cost you to survey that land to break it down to acres in order for you to sell per acre?
So the surveyor I use usually charges me about $600 to $700 for each tract that he cuts up for me. Okay, so the last parcel of land I had was 189 acres. It was in Reagan, Tennessee. Cost me $225,000. I paid $9,000 for the survey. We chopped it into 15 pieces. 189 acres. We chopped into 15 tracts of land. And so it was $9,000 for that survey. And so those surveys, they give me all the surveys and the legal descriptions. And so each tract is what I would like. If I sell tract number 1, I give the person who bought it a copy of the survey, a copy of the legal description, a copy of the amortization schedule, so they're aware of, you know, what they're paying and how long it's going to pay them. And I don't charge any prepayment penalties. And I do charge a late fee if they're late, you know, with their payments, but I don't charge any prepayment penalties. I'll let them pay me off as soon as they want to, most of the time anyway.
Tim, I got a question. I definitely want to start off by saying thank you for telling us about the land. I never know anything about actually land. I always thought about houses. So when you get this 100 acres and you break it down into different plots, are you selling it for land ownership to build houses, or what are your tenants like? Why are they buying the land?
So where I live at, I live in rural Tennessee. I live in a place called Hardin County, Tennessee. And so there's not much out here. And so most of the land that I buy is unrestricted land, which means they can build or do whatever they want to do with it. There's no restrictions on it. And so what I try to look for when I buy a piece of land, I try to look for a piece of land that has road frontage, enough road frontage that when I chop it up, everybody who has a tract of land has a little bit of road frontage so they can get to their piece of land. I try to have electricity that goes down that road where everybody's got access to their property. Hopefully there's a power line going across there so they got access to power or water or gas or any utilities or an advantage to have. But I try to have at least electricity there. If it doesn't have water, they can drill wells, you know, so on and so forth. But you want them to have power. So once I get them with enough road frontage, and then I'm able to chop them up into those individual tracts, I have people who buy them and they put a little cabin on them. I have people who buy them and they just use them to go hunting. I have people who buy them and they put mobile homes on them, or they build houses. Some people buy them and they just fence them off and put their animals on there. Again, there's no restrictions on most of the land that I buy, so they can build or do whatever they want to do. And so that's what I've run into. I mean, that's me, and that's what I do over here where I'm at. I don't know where you guys live or what goes on around you or what kind of restrictions your land has, but I've just found that works for me. I can buy the cutover land cheap for like. The last time I bought some, I paid $650 an acre. I bought 380 acres of it. I paid $240,000 for it. I chopped it up into 18 tracts of land, and I sold those tracts of land for about $2,000 an acre, for a total of $660,000. I sold all those 18 tracts of land, and so I've learned that. Back when I was buying houses, I buy a house for 20, sell it for 40. Well, in order to make 200,000, I got to do that 10 times. But with a big tract of land like that, I can make those couple $100,000 in those tracts of land with that, using the price per acre as my basis. And so I'm able to do bigger deals by buying the bigger tracts of land and still using the same methods, the same chop it up. And I try to chop them into manageable pieces, like if an acre of land, like maybe 20 acres for $40,000. I charge $1,000 down, and then I finance the balance at 10% interest, comes out to $300 or $400 a month or something. So for $1,000 down and $400 a month, you can buy 20 acres from it. And that seems feasible to most people who are wanting land, who can't get the loan or whatever. I make it easy for them. Go ahead.
So my question to you, because I know that when I first met you about 5 years, you're bringing in almost roughly $40,000 a month in passive income. What I know that me and you always say I'm not the smartest guy in the book, but I created for my family support. I went to work. What was the hardest step, or what do you think is the hardest step for somebody on the call that's trying to get their first property to create that passive income? Like yeah.
To me, my hardest thing, getting the money, by being able to borrow money. Because when I first started, I had bad credit, and I had student loans that I went to college for a year. I racked up about 15 to 20 grand in student loans, and I never made one payment on them, dude. And they just followed me around in default for like 10 years. there was a time in my life I thought I was never going to get out from underneath that $18,000 of debt. But you know, I've got some videos that have I've told my story a couple of times, but I bought a triplex. I was living at my mom and dad's house with 2 kids and a wife, and I had to move back home, and I was 27 years old, and I was pissed off, and I didn't know. I hated it, man. And I just said to myself, how can I make sure that this doesn't ever happen again? And the only thing I could think of was like a triplex where I lived in one apartment and I rented out the other 2, and it made my mortgage payment for me. And that just made sense to me. Like, shit, like you can't ever kick me out if I'm making the payment, and I don't even have to make the payment out of my own pocket. You know what I mean? That was the thing that got me. I'm not responsible for making I just got to make sure that the tenants make their payment and I'll be good. And so I managed to talk my mom into signing a deal for me. I worked the deal out. It was 100% finance deal. Matter of fact, we got a check back for $1,600 when we bought it. And I bought a triplex for 80 grand. And we lived in one and we rented out the other 2. And I lived there for 9 years, and I ended up selling it for $225,000. And that's when we moved to Tennessee. And I had about 100 grand when I moved to Tennessee. And when I got here, everything seemed like it was on sale. So I told my brother, I started spending, you know, when you get 100 grand, you ain't never had 100 grand before, you start spending it kind of quick. And I told my brother, hey man, it's going kind of quick. Why don't we start a business? I find deals all the time. I love finding deals. They're everywhere. I can see them. I can find them. I can do them. My biggest problem is managing the funds. And I asked my brother to be my partner. And what I want him to do for me is to manage the money. When I do a deal and somebody says, here's $2,500 down and I'm going to make the monthly payment, they pay my brother. He lives in Florida. It goes to our company address down there. He collects the payments. He makes all the bank payments. He pays all the taxes, the insurances. He keeps all track of all the crap that I don't really like keeping track of. And it allows me to do the things that I'm good at, which is finding deals and buying them and selling them and doing the things that I do. And it's worked. Our teamwork has worked great for us. It has, you know, I trust my brother. It's hard to find somebody that you can trust with your money like that, like completely, totally blind. I know that he's good for it. And I've been blessed to have him help me. So he was a big part. You asked me the question, what was my hardest part? Is getting the money. When I first started, I asked my brother to join with me. When I first started, I told him I would take on all the debt because I didn't want him to think, I wanted him to feel confident in this. So as we did our first couple of deals, I took on the debt. I signed for it. When I got to a certain point, the bank, when I got to about $200,000, the bank said, hey, that's enough. We don't want to loan you anymore. We're happy with what we loaned you, but that's it. But at that point, my brother said, hey, I see what you're doing. He's got a really good job, really good credit. So he was like, hey, I'll start signing some of these. And when he agreed to sign with me, it opened up a whole bunch of other doors that I wasn't able to open before. And it enabled me to do bigger deals. And now I'm doing deals that I never thought I would.
So we said that you said the bank, they said you couldn't do no more after 200K. Have you ever been taken in the back room and they been treated like a king though after you went back to them and have bought more property? Because you know sometimes I'll be taken in the back rooms by the banks. It's the best feeling ever.
What happened was they told me no at that time, so I had to go to a different bank. I went to another bank, and that guy started working with me, and he worked with me for a few years. And then there was a year, it was like October, and there was like 4 or 5 deals on the table that I wanted to do. And he was telling me he couldn't loan me any more money this year until he saw my tax return from next year. So I'm like, shit, I can't wait around. So I went to a different bank. It's called Wayne County Bank in Wayne County. And since I've been going there, probably 8 or 9 years now, they have never told me no. They've always wanted to work with me. They've seen what I'm doing and they back me 100%. And since then, we've paid off those other 2 banks. And they tell me all the time when I see them uptown, the guys, they're like, hey, we're, come by anytime. They want to work with me now, but I'm a loyal kind of guy. If you work with me and you help me get to where I'm going, then I'm going to stick with you until you tell me, hey, I can't help you anymore. Then I have to look somewhere else. But so now I'm sticking with the people I'm with now. And if I ever need them in the future, I know they're there. So
I have a question.
Sure.
Do you keep all of your properties within Tennessee for tax purposes?
No, ma'am. I keep them within Tennessee for just my own personal. That way, if I have a problem, like let's say somebody quits paying me and they're living on the land. Let's say they live on the land in a tent or something. Well, I can't just take the land away from them. I have to have them evicted. So I have to go to that county, wherever that county is, and I have to go to their courthouse and I have to file paperwork to have them evicted. So I don't want to drive too far if that ever happens. So I try to keep the county. I live in Hardin County. I try to keep the counties that are surrounding that touch Hardin County. That's where I buy properties, the counties that touch my county. And I might go a little bit further out of way. It just depends on the deal, but I try to just keep them within an hour drive time of where I live.
Gotcha. Thanks.
Yeah.
Yeah,
Do
but
you ever buy
go ahead.
large tracts of land that still have trees on it? And
Yes.
then how do you end up getting it cleared? Do you sell it to like a timber company? How does that work?
Okay, so I've never done that. I have bought tracts of land that have trees on them, but most of the time I just sell them with the trees. I buy the land, like I give you an example, that piece of property I was just talking about, 189 acres, I paid $225 for it. It had trees on it. And it actually, I had a logger go out and look at part of the trees, and he offered me $29,000 for about 40 acres of trees. They were hardwood trees. And we thought about it and we just said, you know, the time it took him, it was going to take him 6 months and all this other stuff. And so we were just like, it's not to our advantage to do that. I was able to sell that land I was paid a little bit less than $1,200 an acre for it. I was able to sell it for $3,500 an acre. I split it up into 15 tracts of land. I sold all 15 tracts of land in a 2-week time frame. They just sold really quickly. And so I've heard of people who have bought a piece of land. Let's say they bought 100 acres that had trees on it, and they had somebody come in and cut the trees, and they sold all the trees, and they sold it for enough to pay for the land. I've heard stories like that. I've never been able to do that. I don't really know anything about trees. I'm not really sure. I know some of the other ones are like white oaks or whatever, some of the high dollar ones, but I don't really know much about them. And so I just kind of stick to what I know. I sell the piece of land. It's got some trees on there that are worth some money. I told the person I sold it to, hey, there's some trees on there that are worth some money. You know, I hope that they do something with them. You know, they're buying the land from me. I hope they do something with them, you know, and chop it down, make $5,000 and pay me $5,000 so you get it paid off. I don't know.
Now, Tim, you have to tell them, everybody, the reason that he sells his property so fast, this man has a buyer's list out of this world. You can't even go out eat lunch with him. People will run up to him like, man, why you ain't sell me a property? When you going? Like, literally, I'm telling you, every time we go eat, it's crazy. I'll be like, what in the world? He's the man in this town. So he does have a extensive buyer's list. Now, I know when I first started buying properties, you used to tell me don't do rehab. And I always said, well, I want to force depreciation in case something go belly up. Why would you? I never really got around to why you told me not to do the rehab, just sell the property as is.
To me, well, when I sold it with owner financing, I didn't have to fix it up. To me, it saves a lot of time. I've bought in properties and fixed them up before. And so when you buy them, then you're either dealing with people who you think are going to come and fix it up for you, who usually don't do the job that you want them to do or whatever, and you end up displeased. Either that or you end up doing it yourself. My whole family, I have to wrestle them all, and they all go with me, and we all go work on it, and we'll be out there for a month or two. It's not what I want to do with my time. I'd rather be looking for another deal. I don't want to be painting walls or whatever. So to me, like this house I just bought, I would rather buy something at such a discount that I don't have to fix it up, that I can just sell it and pass on. Somebody else can buy it and fix it up, and maybe they can get a few dollars off of that or whatever. I want easy. That's how I roll. I like to buy things for cheap and sell them for cheap and let somebody else get a good deal. Hopefully they're happy they got a good deal, and they that, you know, I made some money, they made some money, everybody's happy. That's how I like it to be. That's just me.
Now, did you have a passive income number that you wanted to make monthly before you know what I mean? Like, did you have a number set in mind?
When I first started, I told my brother I wanted 10 grand a month or $1 million in property or 10 grand a month. And
you exceeded that. You exceeded that.
I wanted, you know, my brother, he's 7 years older than me, and he tells me that he's ready to kind of slow down, but I want to keep going.
Tim, we have some young people that are on tonight that were invited, and they're 25 and under.
Okay.
What advice would you give them for starting out in this sort of business?
The best piece of advice I can tell you, if you can learn this one skill, you'll be good. You'll be golden no matter what you do. If you learn how to find a deal, if you can find a deal, you'll be okay no matter what you do. I even said this, like people who don't have any money or don't have any credit or anything, if you can find a good enough deal, somebody will finance it for you if it's a good enough deal. And so that used to be my thing. I mean, I would find deals so good that people would have to find. I mean, I guess they wouldn't have to, but I'm convincing. So if I believe in it, then I can get you to believe in it. Then we believe in it, and we can do it together. You know what I mean? When I first started, I had a mentor that, again, I didn't have any money. I had more time than money, but he told me, he's like, hey, I see some of your deals. I will, if you bring them to me, I'll put up the money. You do all the work. We'll split the profit. And so this guy he had a PhD in real estate. He used to teach college real estate classes. And so I started doing deals with him. And I first started, they were little single wide trailers in rental communities. I say that, but South Florida, there's a lot of migrants, a lot of migrant trailer parks, and you could buy those mobile homes rather cheap. Sometimes I could pick them up for $1,000, $1,500. And then I could turn around and rent them out for $250, $300 a month. Well, I got up to where I had about 12 of them, just buying them with this other guy's money, and then we would split the profit from it. And it worked out pretty good for us for a while. Of course, you're not really building equity there. You're just kind of building a cash flow from the low cost investment. But to me, I've always hustled. I've always found deals. I always I like digging through garbage. I like finding free stuff. I love finding how, like, if I buy a house that somebody left full of stuff, my whole family will go in there and dig through everything, man. We love free stuff. But, you know, I don't know.
So what do you think about foreclosures?
Well, right now, they're just not too many. They're kind of few and far between. There for a while during 2010, 11, 2012, they were prevalent. That's a lot of those $20,000 houses I'm telling you about. They were foreclosures. I was buying them off of the MLS from I had a broker who has here in town who did a lot of REOs and a lot of foreclosures, and I bought a lot of properties from him. I mean, I'm good for it, but right now they're just not on the market really.
So Tim, what do you think is going to happen with the current market now and the way it is? What is your opinion on that?
To me, just my opinion, when I look at the market, everything's so high right now that I feel like there has to be something coming, you know, like I know that because of COVID, that there's a lot of unpaid or people who are behind in their mortgage that the government hasn't allowed mortgage companies to do anything about it right now. So they're all just kind of hanging out there in limbo until somebody does something about it. It's going to come sooner or later. I don't know when it's coming, but to me, I feel like there are going to be some foreclosures coming up because I can't see how the government can not make them pay it. I don't know. I heard a story, something about Biden doing something about forbearance, like adding it to the back end of the loan or something. And so if he does that, then that'll forbear everybody. It'll add some years to their payments, but they won't get kicked out, and they'll be able to just continue making their payments, and everybody will win, I guess. Maybe that'll happen. I don't know.
Tim, I know when you told me years ago, you say keep it super simple, for the kids, that's the one. I want to say that I think it was Rosie asked that question. I think the game is to buy low and sell high. That's what I was taught. That's what Tim always taught me. You buy your properties as low as possible. His motto and my motto still to this day: every dollar out, $2 in. Everybody's my partners know that. I always say every dollar out, $2 in. So I would say what he's told me over the years: you keep it super simple. You buy low, sell high. I have a young guy that I spoke to that's in his early 20s. He's buying proper cars from like Mercedes and stuff like that that's on their lots. The old cars like 5,400, but he's talking the dealership down to like 32, 3,000, and then he gets the car and get a detail and then sell it for 6,000. And he keeps it super simple. You just want to make sure whatever you do, especially if you even sell or finance that car to somebody, you just keep it super simple.
I agree.
Tabor, in the beginning, you talked a lot about leveraging your credit cards. Can you expand on that some more? How we go about leveraging our credit cards if you happen to have a high limit, but your cash advance limit is like lower, you want to stay under that 30%. How do you get that credit card that's, if you have, I don't know, $20,000 limit, how do you leverage? What do you mean by leveraging it? How do you get that money into your account to make these investments?
So there's different ways. If there's business owners on here that has PayPals, you can actually write yourself an invoice. You're going to need a personal account and a PayPal account. You'll basically write yourself an invoice for the money that you need for your down payment on your property, whatever. The power of leverage, what I mean, is using OPM, using other people's money to create a passive income for you. As Tim said, in his early days, he had problems getting money. Most of us have the money and sitting right there in our wallet. We just don't know how to liquidate and use it. For example, if you have a $10,000 credit limit, that means you're allowed to use $3,000 of available credit before your score tanks. So in that situation, what I would do is I would take the $3,000, write me an invoice, or you can do a balance transfer to your checking account, or you can ask for convenience checks. Thanks. Most of the credit cards will give you convenience checks where you do closings on.
Hey, Bo, also, can you answer the question for Dr. Ness Wanamaker?
When you take the $20K off the card, does it have to be paid? No, it doesn't have to be paid in 30 days. You're going to have a minimum payment. So normally a minimum payment on $30,000 withdrawal is going to be about $420 something. But remember, you are cash flow. You're paycheck parking. So all your reserve cash flow, all the money you have left over off your bills is going back to that card. So that's going to automatically satisfy that card payment. So you really never have to worry about that credit card payment because all your money is going back to that card. You just keep dumping that money back onto your card every pay period, all your cash flow, all your paycheck, you just dump it back on that card and you'll pay that card off an accelerated rate. Brandon's here.
I had a question for Tim.
Yes.
Yep. Sure.
Okay.
Oh, you're saying when you were buying your properties, you stayed within your state. Did you ever try to buy anything out of your state or international? Or do you have any advice about that?
I haven't bought anything international, but in my early days of investing, I did buy a few properties in other states, not for owner finance, but for quick flips. I call them virtual flips. I bought a couple of school buildings. I bought some land in Alaska, a couple other places, in places like South Dakota, Nebraska, West Virginia. I tell you what, listen, I've got some videos. I'm going to send Sabor a PDF file with my videos on it. If any of you guys want to watch some of my videos with some of my deals, just hit Sabor up and he'll send it to you. And you guys can, it has video about the school buildings and some of those little houses and land. And big tracts of land and other things that I do. So
Okay.
I don't really
Thank
have any advice. I don't really have any advice for you trying to do something in another state. I know when I did that, I was taking a risk, but I believed in myself and what I was doing. And so I do push that a lot, that if you believe in your gut and your gut's telling you to do something and you believe that you can do it, then you do it.
Do it. Question for Tim.
Sure.
Tim, what do we look for when we're buying land? What is land that we do not want to purchase?
Usually wetlands, something that, you know, it's got water that's sitting on it, like swampland. You don't want that. You want land to be as pretty as you can, but I found that cheap is good. So the cheaper, the better. Usually where I live, they'll have these timber companies. They come through and they cut all the trees. And so then the land looks kind of ugly because it don't have any trees on it. So you can get it kind of cheap. And in 2 or 3 years, when the plants start growing back up, it doesn't look as ugly. And so I usually can sell it even if it's ugly, because I just sell it the way, when I write my ad, it sounds good. And so if I buy land for $650 an acre, if I can sell it for $2,000 an acre, if I can sell a 10-acre tract of land for $19,900 with $1,000 down and your payment's $200 a month, that sounds so appealing to somebody looking for land, that I have so many people who want to buy it that it sells quickly. And so that's all I try to do. I try to get it. Some people, like, if you look for land right now, you'd be hard pressed to find it for $2,000 an acre. And then to find it for $2,000 an acre with owner financing is even harder than that. And so when they come across that, even if it's ugly, you're still the only person offering owner financing. And so most of the time they'll take it in.
And then, great, thank you so much. And then also, when you purchase a land, what's the tax consequence when you sell it? How do you keep yourself in a bracket where you're not, getting hit with those capital gains?
Okay, so I am hit with capital gains. I do.
Or at least a lower bracket, right?
Okay, and so because and this is one of the reasons why we liquidated the houses. This is a long subject, really. Probably more versed in it would be my brother to help you, but quickly to let you know, because I'm in the real estate field, they consider me a real estate dealer. And so I'm hit with a different kind of tax than you would be, since you're not in the real estate field. And so I'll give you an example. Let's say I buy a piece of land for $10,000, I sell it for $20,000. They give me $1,000 down and they make 6 payments at $200 a month to me. So they've paid me $2,200 already this year. So it's the end of the year. So to me, I would say they paid me $2,200. I'm going to pay taxes on the $2,200. But that's how it would be. But for me, since I'm a real estate dealer, they want me to pay taxes on the whole gain up front. So they want me to pay taxes on, I bought it for 10 and sold it for 20. They want me to pay taxes on that $10,000 gain up front, even though I haven't collected that money already, which is kind of weird to me. But one way that we found around it was, when we create this note for $20,000, it's not really worth $20,000. That note that I created isn't worth $20,000 because of the way I created it. I just charged $1,000 down. I didn't do any credit checks. And so I didn't do anything to make this note actually worth the $20,000 value, that the face value of it. And so if I were to try to sell that note, since it's just land, I would probably only get 45 to 50% of what the note is worth. And so if I buy it for 10 and I sell it for 20, and then I can only sell that $20,000 note for 10,000, I really didn't gain any, did I?
Right.
So that's how we've started to get around that. What we do is we say there's a little gain, maybe 12,000 instead of 10,000. And so we'll pay some taxes on that. And then I don't have to pay any more taxes on that property as capital gains until their payments catch up to that mark. And then they start paying past that mark. And then I have to pay capital gains as they make from that point on.
Yeah, that's why they got out of the real estate part.
That's why we're buying the houses.
So I got two questions on the side here, Tim, that's in the comments.
Thank you.
It says, do you still use the ARV formula for the land as you would rehabs? And also, where do you place your ads?
I place my ads mostly on Facebook Marketplace, Craigslist, but mostly Facebook. I'm a member of the MLS, so when I post a property on the MLS, it syndicates it out to Zillow and all that other stuff, but most of my buyers come from Facebook.
All right, and I have Raheem and Raquel. They asked a question about, isn't there a balance transfer fee on credit cards? Yes, there is a balance transfer fee that's associated with credit cards, but a lot of times it's not as high as you think it would be as far as doing a cash advance off a credit card. Can y'all see my screen?
Mm-hmm.
I'm always sharing my screen with everybody so they do the numbers with me. Okay, so here I have a credit limit of 20.
I think there was another question for Tim about ARV. Did you?
Oh yeah, I apologize. Go ahead, Tim.
Okay, with the ARV, it's not really like the flip or anything like that. To me, I just know the market that I live in. Because I buy property in my area, so I know that if I buy land for $650 an acre, and you can't even find land under $1,000 an acre in my area, so I know that that's a good deal. And so even if it's ugly or whatever, I know that I'm going to be able to sell it. And chances are, a good going rate for a piece of land is $2,000. With owner financing, I'm the only guy on the market selling it for that cheap with owner financing. And so I got that part of the market. And so I know that I can sell it for a certain amount. I don't really know how to do it. I don't really do ARVs. I just kind of work the deal beforehand. I know what I can get for it. And so I just kind of analyze the deal up front. Before I actually buy the property, I already know what I'm going to sell it for and everything like that. But it's just because I know my personal market. That's how you find good deals, by the way, is to learn your market. You learn your market, and then that's how you're able to find a deal, because hey, this house is worth $100,000. This guy's offering it to me for 60. I know it's a deal. Get on it right now.
Question. What corporation, I'm sorry, is there anyone else that has a question before I ask?
Yes, Telly had a question. He's had his hand up for a minute.
Okay, go ahead.
I was just wondering, what is there certain credit cards that either Sabor or Tim, there's certain cards that work easier or they're better at lending or not lending, but the credit line?
I pulled this card up. I think I just pulled this one card up that I like. I use this for a lot of stuff, but it'll help answer, I think it's Raheem question also. So he's saying that they're balance transfer.
Because I know before you said something about the Navy Credit Bureau, that what it was called.
Navy Federal
Credit Union.
Yeah, Navy Federal Credit Union. Yeah. Oh no. So yeah, Navy NAV is for business, setting up a business like self-lender for business, or Credit Karma for business. But yeah, Navy Federal is good. I don't use them for their business card, only because when you ask for credit line increases, which we teach all of our students how to ask for credit line increases every 3 months, they do another hard inquiry or hard pull on your credit report. So, but for easy transfers to get into real estate and stuff like that, for like down payment, Discover would be a good one. Chase would be a good one. But this one, for example, this one right here, I have 26 line of credit. I'm going to go to my credit card services, and I'm just going to go to balance transfers. On this card right here, that's going to give you two options that you can do. So you can do the 0 interest rate for 12 months, and they're automatically going to charge you a 3% transfer fee off the top. Or I can take the I can pay 5% for 15 months, and they charge me no transfer fee. Make sense? So in this, if I select this option, it's going to tell me that I have 25K that I can withdraw. Say if I did 12K, and I go to view continue terms, it's going to automatically charge me $360. That goes on top of that 12 automatically. That's nothing for what you're going to get in return. Because remember, I'm buying a property that's going to be generating me, or a rental that's going to be generating me a cash for $1,000 a month. and I'll only have to pay the minimum balance on this credit card, which my credit card, I don't have to go to the bank, get a loan anymore. My credit card payment every month is gonna be like $125, $140. So remember, I'm making $1,000 and I'm paying back that credit card if I didn't do the velocity banking strategy and pay back that credit card using my cash flow. I have no lose here. I got myself in a property that's generating cash flow for my family for only $360. Yeah, I'll take that balance transfer fee.
So Al, actually, with my Navy Federal, I can actually tie it into my checking and savings account. I also got a U.S. Bank Platinum card where I could actually tie in my Navy Federal bank account, where I could actually easily transfer money over from my credit card to my bank account just by dragging it over. So like some of the cards allow you to do the balance transfer a lot easier. And some of them you may have to do a little bit more to get it going, but some of the process now are a lot easier.
Hey, I got a question for Tim.
Sure.
You still on?
Yeah.
I had put it in the chat too. Actually, I got two questions. The first one is, what advice do you have for the best way to learn your local market?
Okay, so here's what I do. And so I am a member of my MLS because I'm a realtor, but you can go to Zillow or any of those websites, realtor.com, trulia.com, any one of those. And what you do is you sign up to be notified of the new listings that come on for sale in your market. So I cover Hardin and McNairy County. And so I sign up every time a property gets listed by a real estate agent in my counties. I get an email about it, and I make it a point to check them all. I see what property listed, how much it's listed for, who listed it, so on and so forth. I make sure I also set up that every time a property sells in my market, I get an email. So every single property in my counties, I'm notified when they're go for sale and when they sold. So I get to see how long they were on the market, how long they sold for, how much they were asking for it versus how much it actually sold for, who sold it, when they sold it, so on and so forth. And so I don't remember all of it, but I make it a point to read it. And so when I get that email about a listing, and I'm going to tell you a story here quickly, but when I get that email about a listing for a house for $20,000, and when I look at it, since I've been watching the market for the last 3 months, when I get this email, I automatically know, hey, this is a deal. It seems like a deal. Let me go look at it right now to make sure. And so then you run out there and you look and you say, hey, is it a deal? And so because I've been looking at all those 3-bedroom, 2-baths on 1 acre, they're $80,000, and now all of a sudden I got a 3-bedroom, 2-bath for $30,000. I'm like, hey, that seems like a deal. Let me go check it out. That's how you get to learn your market. I'll give you an example. Persistence. I got an email from Zillow. This was a long time ago, but I got an email from Zillow, 7 o'clock in the morning, Sunday morning, a 3-bedroom, 2-bath brick house on 16 acres for $24,000. And so I was like, holy cow, that seems like a deal. So 7 o'clock in the morning, Sunday morning, I'm calling the listing agent. I called her about 50 times till she finally answered the phone call. As soon as she answered, I apologized. I'm sorry, very sorry, but you got a listing. I want to go look at it. I went and looked at it. I ended up getting it. I bought it for $25,000. I didn't touch it. I put it back on the market, sold it for $42,000 really quickly. I didn't fix it up. I could have fixed it up and made more, but I just quickly sold it and made some money. But that's how I was able to find that deal, though, because I got that email and I knew my market. And so I was able to just immediately know the deal. But that's how you do that.
Tim, what
use
makes
those
you?
emails?
Sure,
So you
go
kind of use those the sites or the MLS to kind of like help you comp the properties in your area. Then
I do use to comp the properties, but I use them to just be notified every time a new one's put on. And I get to see it. You just get a feeling for it. You start getting a feeling for the properties that are coming out. And when that good one hits, you get that gut feeling that tells you, hey, it's a deal. That seems like a deal.
Right, and my other question was for with buying the land and using the surveyor to once you buy your land, using the surveyor, you know, to break it up into separate lots.
Right.
Do you have like a specific? Do you have like a specific criteria that you look for in a surveyor when you know once you bought you know a good size land?
No, I don't usually. I have a surveyor that I've used quite often. I've used two or three, but I try to use the same guy most of the time. He's pretty good. I tell him what he knows what I'm trying to do. And so sometimes when he gets out there in the land and where he was going to cut the line doesn't seem like the right place, he just needs to move it over a little bit, then he goes ahead and makes that adjustment for me. He says, hey, I thought it was better over here than over there. And so he usually works out pretty good. If you just tell your surveyor what you're trying to do, they'll help you the best that they can.
So, Tim, I have a question for you.
Sure.
Does your surveyor travel all over Tennessee, or is he only specific to your area?
He lives in Henderson, Tennessee. He covers several counties around his area, but I don't think he covers all of Tennessee. I don't think he goes to East Tennessee or anything. I think he stays over here, West Tennessee.
Tim, I have a few questions.
Sure.
I'm sorry, guys, I can't raise my hand because I don't see that feature on my screen. So the first question is, so are you using MLS to sell a lot of your properties, or?
No, the owner finance properties, no, I usually don't. I usually just use Facebook.
He
The
has
one
a
you bought for
buyer's list.
25. I'm sorry, Sabor. The one that you bought for 25 and sold for 40, you put that one back on the MLS or no?
Yes, I did, because it was a house. If it's a house, but see, I didn't sell that with owner financing. I just flipped that. So if I like this house that I have on the MLS now, I just bought Monday. If it's a house and I'm gonna flip it, yes, I put it back on the MLS.
Okay, and which corporate?
Go ahead.
Which corporation are you using? What kind of corporation do you use? Do you use one that's incorporated in Tennessee to do your transactions, to, like, you know, hold your properties, or what do you do?
We have LLC. We have two LLCs.
And are they based out of Tennessee, or do?
Yes, ma'am. They're based out of Tennessee.
Okay, and the last question is tax. As far as taxes are concerned, do you have them pay the taxes upfront for the land, or you incorporate in the payment?
Here's what I do. So let's say I buy a big tract of land, I chop it up, and I sold this person 20 acres of land. So I kind of figure out what the tax base is on a per acre basis, which is about $10 a year. And so if I sold you 20 acres, I say, hey, your taxes are $200 a year. That's $15 a month added to your payment. And then I just have them pay it with their payment every month. And then at the end of the year, because when I sell these properties, I use what's called a land contract or an agreement for deed. I don't sell I don't sign the title over. I keep the title in my name. So I continue to get the tax bills. And so when the tax bill comes at the end of the year, I don't have to chase the person around for the $200. I've already got their money. I could just pay it.
Okay, you said it's called a land contract, or what?
A land contract, or the agreement we use, it's called an agreement for deed.
Thank you.
Yeah.
Hey, Tim, isn't it also contract for deed as well?
Yeah, same thing.
Okay, cool.
Hi, everyone. I think we have one more question, and that's from Raquel and Raheem, if I'm not mistaken, if they have a question, and then we're going to wrap this up for tonight.
Okay.
When you find a house that has a large piece of land attached to it, I mean, a house, 3 bedrooms, 2 baths, it's 14 acres, why wouldn't you have maybe cut that down and said, okay, I'm going to sell a house with the 5 acres and then sell the other acreage? Or do you do that sometimes?
I wouldn't be opposed to doing it. Most of the time I've found that it doesn't really make that much of a difference. Like if I just sell the house with the 14 acres, or if I just sell the house with 5 acres and sell a separate 9-acre piece, it usually end up getting the same amount anyway. Roughly. That's why I don't do that. Listen, anybody on here listening, hit up Sabor to get that list of my videos. You guys will love them. It's just me talking about some of the deals I've done. I've sent it to him, so he has it so that he can send it to you guys. And if it should have my contact information on there. If you guys ever want to call me up and talk or whatever, feel free to hit me up.
Thank you.
Yes.
Thank you.
No
Thank you
problem.
guys very much. Everybody tell Tim thank you.
Thank
What an
you,
awesome job,
Tim.
Tim.
Thanks, Tim.
All right,
Thank
Rosie, the
you.
closing is all yours.
Thanks so
Rosie.
much. Thank you.
The closing's all yours, Rosie.
And then please say thank you to Sabor for hosting.
Thank you, Sabor.
Every Friday.
Thanks, Tabor.
Thank you, Sabor. Sabor.
So Renee Allen is also on the line. She's one of the coaches as well as myself. Joy DeMary is someplace on the line as well. She is Sabor's wife and also partner in the business. So we thank all of you for joining us on tonight. And if you are interested in taking the classes that Sabor offers, we are asking that you, if you were invited by me, you could certainly send me an email. But Sabor, if you could type in your email, that would also be great. So everyone could send something to Sabor or to myself. I will also put my email in to everyone. So I am Rosie, so it's GetSmart.
Who's your mom talking to?
Investors@gmail.com. If you are interested in getting further information, joining our classes so that you can learn how to become financially free, like there are so many people on here. I see Lloyd on here tonight. Thanks, Lloyd.
Hey.
Brandon, thank you, Brian. And of course, there's some others. I believe Rodney was on earlier, who's normally on the calls as well.
I'm still here. Hey, guys.
Hey, Rodney, yes. So thank you guys so much for
And
being
Jonas-
on
Jonas is
tonight.
always on the line with us.
Jonas is on. Thank you.
Hello,
Yes.
you're welcome. Thank you so much.
So once you become a member, you can certainly join us every Friday at 8 p.m. and also get some further information about how you become a member. You can send it to info@demaryfunding.com or to myself at getsmartinvestors@gmail.com. So please take those emails. Let's get started on this road to financial freedom. Thank you all for joining us tonight.
Thank you,
We will
Rosie.
see you next time. Have a great
Thank you,
night.
Rosie. Thank you.
Good night.
Thank you.
Good night.
Good night.
Have a good night.